All right, welcome back to The Explainer. Today, we're doing something a little bit different and honestly, pretty exciting. We are actually cracking open a highly confidential document. We're looking directly at the official training protocol for the Bright Futures proprietary investment firm. If you've ever wondered exactly how a professional, institution-grade prop firm takes everyday people and turns them into a highly disciplined human execution layer, well, you are absolutely in the right place. We're going to break down their entire proprietary system step by step.
So, let me ask you this. Can you actually trade without emotion? I mean, it sounds simple on paper, right? But think about the anxiety, the sweaty palms, and just the sheer panic that usually pops up when you're retail trading with your own hard-earned savings. What this firm does is entirely different. They literally strip all of that away. They don't want your hot takes, and they certainly don't want your gut feelings. They want a cold, mechanical reality on an institutional desk. To see exactly how they build this kind of trader, here's our game plan for today. First, the professional trading premise. Second, the gold-only launch phase. Third, market progression and expansion. And finally, the daily desk routine. Let's dive right in.
Okay, part one, the professional trading premise, specifically looking at operating firm capital. $700. That is the exact amount recruits start with. In this foundational stage of the program, participants operate strictly as a distributed human execution layer following highly standardized procedures. You do not use your own savings here. You start with the $700 live operating account funded entirely by the firm. So from day one, you are playing with house money, which, you got to admit, completely flips the psychological dynamic. The firm draws a massive line in the sand right here. On one side, you've got your typical discretionary personal account, you know the one. It's usually chaotic, emotional, fueled by random gut decisions using your private savings. But on the other side, you have the firm's strict premise, a true professional production environment. The firm treats every single live account as a professional operation used purely to execute their strategies. It is not a playground for casual retail trading.
And that brings us to what they call the AeroPrice Dynamic, the absolute core of their entire methodology. The rule here is incredibly simple and literally unbreakable. Absolutely zero execution happens without complete system alignment. You have to sit on your hands and wait for their specific structural conditions and screen prompts to trigger before a trade is ever authorized. You're executing the system's logic, not your own.
Moving on to part two, the gold-only launch phase, or as I like to think of it, the proving ground.
So for those crucial first 30 days of a recruit's journey, man, survival requires a level of rigid discipline that most of us just aren't used to. Recruits are put under a strict mandate, 30-day gold micro contract exclusivity. You might be wondering, why just one market? Well, by focusing solely on their initial flagship market, gold micro contracts, the firm is able to perfectly standardize participant behavior. It completely eliminates the distraction of jumping around from chart to chart, and it allows the firm to collect really clean, comparable performance data across their entire human execution layer.
And within that 30-day window, traders operate under what's called the one-position rule. Listen to these constraints. No pyramiding, no simultaneous hedging, and absolutely no averaging into losing positions. Discretionary overrides? Zero. Not permitted under any circumstances. You hold exactly one micro position per opportunity window. That's the whole shebang. It forces an extreme level of focus and risk management.
So you're probably wondering, how do they actually authorize a trade then? It's definitely not just throwing darts at a board. The firm uses this really complex temporal framework. They are measuring price velocity and acceleration, they're factoring in time-to-period conversion, and they use a designated moving average gravitational anchor, which is basically a baseline that pulls the price back, along with specific end-of-run signals. Every single order a participant places must simply be an expression of this mathematical model, period.
But hey, just executing the trade? That's not the end of the job, not even close. Enter strict performance archive logging. This is the intense daily accountability required by the firm. Every completed trade becomes an official operating record. The setup classification, the time, the risk, the before and after chart screenshots, and a strict rule adherence grade. It is all automated and logged. During these first 30 days, they are testing how the system performs in the hands of human operators, and frankly, there is nowhere to hide.
All right, let's look at part three, market progression and expansion, basically how you climb the ladder. Once you've proven that mechanical consistency, your account goes through this exact 5-stage evolution. And notice something super important here. You don't get to scale up just because you had a couple of lucky, knock-it-out-of-the-park winning days. Advancement is based entirely on rule adherence and demonstrated consistency. You move from the initial launch in Stage 1 over to capital build in Stage 2. Once your gold operations are totally routine, you enter controlled expansion in Stage 3, graduate up to a multi-market desk in Stage 4, and eventually reach consolidation in Stage 5, where you might actually receive increased capital allocation.
As you'll see here, this is a highly specific, risk-adjusted progression sequence, built step by step. They're not just tossing you the keys to every market at once, right? You start with gold as the baseline foundation. Then you step up to higher-risk energy with crude oil. Next is broad market dynamics with the S&P 500 or the Dow. Then you hit the high volatility markets like natural gas and NASDAQ. And finally, you get to unique structural drivers like silver and Bitcoin. Each market has its own unique playbook and its own specific AeroPrice Dynamic prompts. You absolutely cannot just treat a new market like it's just another chart. But here is the absolute kicker. Even when you hit that multi-market desk, the golden rule still stands: one open position across all markets. Even if you are authorized to trade gold, oil, equities, and Bitcoin, you only trade one primary market per session and you hold only one total position at any given time across your entire account. The discipline never ever bends.
Which leads us nicely into part 4, the daily desk routine, or, the daily grind.
So practically speaking, how does someone actually execute this day in and day out? Honestly, it's way less about the Hollywood thrill of the trading floor and much more like a pilot running through a rigorous pre-flight checklist. The firm mandates that you perfectly replicate a professional trading desk at home. We're talking a dedicated location with uninterrupted connectivity and functional backup power. You've got to kill the ambient noise, and your written prompt checklist has to be physically sitting right in front of you. You are expected to operate like a true professional, and your environment absolutely has to reflect that.
Okay, so the environment is dialed in, now the daily workflow kicks off. First, you begin by reviewing the higher time frame context to spot anticipated turning zones. Then, number 2, you just wait patiently for complete system alignment. Once the signals say go, step 3, you execute. And crucially, step 4, you allow the exit signals to trigger on their own. Ordinary routine pullbacks are not an excuse for an emotional exit. The system manages the trade. Finally, step 5, you wrap up with the closeout logging, and when the session is done, you stop. No lingering, no extending your screen time. And that brings us to what is arguably the ultimate takeaway of this entire explainer. You really need to hear this mandate from the protocol. A loss that conforms fully to the rules is classified as operating data. A wind obtained by departing from the system is flagged for compliance review. Let that sink in for a second. Strict adherence to the process matters infinitely more than the actual outcome of one single trade. If you break the rules just to make a quick profit, you haven't actually succeeded, you've just committed a compliance violation. Which leaves us with this final provocative thought. You've seen the rules, you've seen the constraints, the exact progression ladder, and the intense accountability. The whole thing is built from the ground up to generate repeatable daily results by completely stripping out human emotion. So the only question left for you is this: do you actually have the discipline to separate your ego from your execution? Could you truly execute this system like a machine? Think about it. Thanks so much for joining me on this explainer, and I will see you next time.